China's performance has a direct effect on the rest of the world. Their economy is intertwined with the majority of the rest of the world, and China is facing deflationary pressure. Plain and simple, the numbers do not look good. Deflation is one of the scariest terms for an economist to hear. An economy that's in a deflationary stage is in a bad place. China, which is the world's second largest economy, is facing deflationary pressure. Now, in this video, we're going to deep dive into some recent economic data that comes out of China. We're going to discuss some troubling signs that seem to be emerging. And before I continue, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. China, which is the world's second largest economy, is facing deflationary pressure. Now, China just reported consumer price index data and producer price index data, and plain and simple, the numbers do not look good. It shows an economy that is slowing down. And before I continue, let me just say that I know that China's GDP did grow year over year. I know that China is not in an official recession, that is characterized by negative economic input or output over a period of time, but China has been on the decline for some time now, and their economy is facing deflationary pressures. It's the consumer price index data that came out. It rose by 0.6% year over year in August. The cost of rent, transportation, and home goods all declined during this time. Now, for reference, the consumer price index was projected to grow by 0.7 year over year. So 0.6%, it's not that high. It's not that much growth, and especially from the world's second largest economy, one that's been booming for such a long time. These are very slow numbers. It's up, getting to a point where it's almost flat. And that producer price index, which is on the wholesale level, so you're talking about big businesses that are producing wholesale, everything, it was actually negative. It declined year over year in August by 1.8%, which is an even bigger decline than the 1.4% that was expected. So again, on the wholesale level, the numbers are actually negative. On the consumer side, 0.6% growth year over year for the month. That, it's almost pretty much flat. Now, there was some positive data that was sprinkled in as well. There was food prices seem to have increased a little bit, particularly the price of pork jumped up quite a bit, and export data also came in just recently, which showed a 8.7% increase year over year. Now, again, exports are China's bread and butter. This is where their economy has shined for a long time and is continuing to shine even during this decline. So in August, year over year, exports to the US, to Europe, to other places, people are continuing to buy from China. And the country will obviously take it. It's good. It's making them money. But all in all, the consumer price index, the numbers are down, especially when you look at the core consumer price index, which is going to take out food and energy and some of those more volatile things. It only grew by 0.3% year over year in August. Now, all of this information is important because China's performance has a direct effect on the rest of the world. Their economy is intertwined with the majority of the rest of the world, and China is facing deflationary pressure. Now, again, that consumer price index, those numbers, they're coming in lower than was expected. On the wholesale level, it is already decreasing. And when you look at things like oil, fuel, and coal, things of that nature, it was actually down 3% year over year in August. And a lot of this is because of weak demand. The consumer in China, there's just the demand is not there. And for businesses, this leads to less investment. So they invest less in the business, they hire less. At times it leads to layoffs, and the consumer knowing this. It's been reported that pay has gone down recently in some places in China. So the consumer that's being paid less, where job security is kind of sort of becoming an issue at this point. Well, yeah, the money that they have, they're not going to just go out spending everywhere. They're going to be more cautious. And deflationary pressures, when people know that prices are starting to drop, sometimes they buy. There are also other times where people expect prices to drop even further, so they just kind of sit on the sideline as they watch prices drop. And again, all of this has a negative effect on the economy. There's people within the country that have been sounding alarms about deflation, economists that follow the country. China is sort of in a deflationary phase, and it's not good. It's something that you don't want to become entrenched. Now, there's a lot of competition on the manufacturing side. There's a lot of manufacturers in China that produce a lot of goods. That's why their exports are so good, because so much stuff gets made there. Well, those manufacturers also produce goods for the local economy, and there's just a lot of stuff in there, but that consumer is not consuming as much. So you just have a whole bunch of stuff that's just sitting there. Prices start to drop, and this is all part of that deflationary trend that's going on. Now again, export numbers are up. When the GDP numbers drop, I'm not saying China's GDP is going, I'm not saying that. The GDP numbers are still going up, but as far as the producer side, the consumer side, there are weaknesses, cracks within the foundation in China that definitely need to be addressed. The local economy within the country really needs a boost. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.